Welcome to this week's special Business War interview. Hi everyone, it's reporter Audi Lee here. Let me start with a little background between the two giants, Hasbro and Mattel. The rivalry between Hasbro and Mattel began in the 1950s period. Hasbro and Mattel has been iconic toy brands since then. The toy market undeniably knows Hasbro, Monopoly, and Play-Doh, and Mattel's Barbie and Hot Wheels. The toy manufacturing giants have long been competing for the top industry position. As a result, investors are keen on which of these huge toys brand names can bring substantial returns over the long term in the investment arena. Now we have two special guests with us here, Brian Goldner, the CEO of Hasbro, and Enon Christ, the CEO of Mattel. Let's start with Brian here. How's the financial performance of Hasbro currently?
Hasbro has done a great job this year without disappointing our stakeholders. The enterprise value for Hasbro is $6,546,225,000, and our EBITDA multiple reaches 5.405. These two numbers show that Hasbro is in a healthy and growing macroscopic condition. Besides, the debt-to-equity ratio for our company is 1.74. This is a little bit higher than normal, but it is not surprising because our company is growing rapidly and is financing the growth through borrowing. Our operating profit margin this year is 9.57%, and it reaches the average of the industry. The return on equity ratio this year is 7.68%. This shows that investing in our company is more suitable for long-term investing.
Now let's hear a little bit from the Mattel side. Enon, what are some financial figures you could give us here?
Okay, this year we have also made great improvements. The enterprise value is $3.2 billion. The EBITDA multiplier is 5.59, which is good, under the normal range and being properly valued by the market. However, we have a debt-to-equity ratio of 5.34, which is temporarily higher than the good ratio range, because we are using debt to finance our growth and it's quite effective. The net sales of 4.58 billion with an increase of 1.76%. The operating profit margin 8.31% is close to the average, which means our operation is efficient and is good at turning sales into profits. Lastly, we have a return on equity of 21.23%, meaning that in relation to stockholders' equity, return on equity could be a good starting place for developing future estimates of a stock's growth rate and the growth rate of its dividends. I'm telling this to any potential investors. The profitability of Mattel in the long term would be rather considerable.
Those are some strong financial figures for both companies here. Most investors are possibly wondering how the returns are for both companies. Let's hear from Brian first. What is the average annual return in the past few years?
The annual returns from 2016 to 2020 are 13.86%, 17.30%, negative 1.66%, 15.45%, and negative 4.78%. The average annual return for the past 5 years is 8.03%. The two negative numbers are due to the economic crisis and COVID-19 pandemic, respectively. Since toys are not necessary goods to people, demand will drop sharply when people have financial problems. In consequence, we are constantly doing a good job during normal years.
What about from the Mattel side?
So Mattel's annual return from 2016 to 2020 is negative 0.24%, negative 37.07%, negative 25.25%, positive 23.56%, and 23.86%. Although we have a negative average return of 3.03%, we have proved that we have the capability to face the global pandemic and still make positive returns during 2019 and 2020. I mean, this is so impressive while so many businesses had to shut down due to COVID 19, and we can tell that the trend of recent 5 years shows a constant growth. So I wouldn't be too concerned about our future performance.
Both company financial figures are strong here, but I'm quite sure that investor may need a little bit more. How about those present values?
The present value of Hasbro is $3,112,007,059. This is higher than the majority of the companies in the same industry. We are proud of this number because it shows the worth of our company and worthiness to invest in our company.
This year, Mattel has a present value of $2.99 billion, slightly below Hasbro, but still way higher than the average among the industry. With the confident data I mentioned before, I promise to our existing shareholders and potential investors that we'll put your interest in the first priority and Mattel won't let you down.
Brian and Enon, thank you for your time today and the valuable insight to the toy industry. Overall, it may be possible for the audience at home that are interested in investing into either of these two companies that Hasbro may have the slight competitive advantage over Mattel. That is it for today. Thank you for catching up with this week's Business Wars special interview.